I'll never forget your trade in ETH in 2017. It was that last quarter was wild. I remember I sold out my Bitcoin at like 2,000. I bought it at 200.
Yep.
I sold it at 2,000. Thought I was doing well. I sold that in April. By December, it was 20,000. 10x.
I think what was the high there was 1,100 that year. To think about it, I sold 330 and felt like a genius, and then I went to 1,100. But I kept selling the whole way up.
Yeah, the back end of a crypto bull market is wild.
Yeah, and it doesn't feel like we've had that.
No.
And so that's why we all hold out hope for that one last.
The famous banana zone.
Hey guys, welcome to Everyday Finance. 99% of traders will soon be replaced by artificial intelligence, according to Raoul Pal's prediction, which would in turn reshape global markets as algorithms outthink people in terms of speed, accuracy, and strategy. This is not simply about automation. Rather, it is related to evolution. Because data-driven systems are always learning and adapting. It is possible that traditional trading desks could become obsolete. Those who are willing to accept AI-assisted decision-making will be the only ones who will be able to keep up with the pace of modern finance.
Now, how do you think about tokenizing kind of semi-illiquid assets like funds when you've got a liquid token? Keep trying to get my head around this. It's like, how's it going to work? Because your token's liquid. It'll end up trading at huge premiums and discounts to NAV.
And whoever owns it has a right to that portion of the fund. And so in some ways it's brilliant because like, okay, you're in Fortress's credit fund during '08 and you're like, oh my God, I just want my money back. And they're like, no, we put up gates. Well, it becomes in essence the black market for the fund.
That's right.
At 70 cents on the dollar, I'll buy it all.
But then does it also become hard for the funds to raise extra capital because there's always a secondary market because of the tokens?
Not really, because again, if you're a fund and you can see yourself, if you really believe you're worth par and you're trading at 60 cents, you're buying those tokens yourself. Right?
Yeah, true.
Right? Listen, how much liquidity will there be in all these assets is really debatable. So
yeah,
liquidity is energy. I got to get people to understand it, to care about it. That's how we create liquidity. It's energy. Apple doesn't need to because everyone on the freaking planet or half the people have one of these phones. Like, we got Apple. And so, but that beautiful bar you're sitting in, if you tokenize that, there are probably like 27 people down in the Caymans that like would like to buy a stake in that bar, but they're not 270,000 people that would.
That's right.
And so small illiquid tokenized assets probably end up only really trading with liquidity in the long run via bots. Right?
Yeah.
Think about this. You're going to have AI sweepers looking for assets that are mispriced. And they're going to be the buyers and sellers. This is not next year. This is 5 years out.
Yeah, totally agree.
But like again, I'm not going to tokenize the 13th floor of this building. The only guy, you're going to have some real estate arbitrage bot.
But it's interesting because, you speak to any real estate guy and they all interested in tokenization. The reason being because they want to sell more real estate and try and make it more liquid. And I'm like, who the fuck's the buyer of this stuff? The pension funds are the...
I don't think there are buyers other than, again, so I bought SpaceX in 2014.
Wow.
1 in 10 SPV and a 2 in 20 SPV. And I forgot what I put in. I think I put in $5 million in each of them. It's up 20x. Right? So 200 million versus mine. I think I'm after my fees. It's probably $160 million. I didn't do anything other than I had the money. It was an easy story. I bought some and I had access. Right? Most people, even wealthy people, didn't have that access. Right? Elon gave a fund to his college buddy who, took employee shares at a discount and then marked them up to us. There were two funds, right? If that was tokenized and someone called you up, you would have said, I'll buy some SpaceX. Now you might not have rode it the whole way, right? That's the one thing about not having liquidity is you ride it a lot longer.
Yeah.
But when we talk about the democratization of finance, I think most people would have bought that space. Remember, Tesla was already a big deal. So you already believed in the cult of Elon. Most people would have bought SpaceX if they had access. And so tokenizing some big story, SpaceX was a big story even then, is a wonderful way to give people access. Tokenizing little stories isn't.
Tokenizing a building, let's say, the issue is young people who are traditional buyers of this kind of stuff aren't interested in those kind of returns anymore. They just don't care.
Yeah. Well, so what's going to happen, and I'm pretty certain about this, is you're 100%, I talk about this all the time. The crypto community is now 4 trillion in wealth. As that grows and people get a little older, they're going to slowly say, every trade doesn't have to be a 10-to-1, right? Like, oh shit, I should have bought Aster right when he launched and I could have made 4x. I feel like an idiot. Like a 12% yield might feel like gold as people get older. But mostly what's going to happen is the crypto infrastructure is going to infiltrate TradeFi. And those people already exist. So the buyer of the 10% yielding, token is most likely going to be a TradeFi buyer who's now comfortable buying in tokens.
Yeah, because it's more efficient to hold it that way. It's faster to settle. And it just
becomes another way to purchase stuff.
Yeah.
Like, make it easy and they'll do it. Right? Oh, 10%. Right? Make it easy and they'll do it. And so I don't think you're going to overnight turn crypto investors into conservative people, right? We have the word degen for a reason.
And so what about on the asset management side? What are you guys doing there? Because you've kind of been stop and start in asset management.
Well,
what are you thinking of?
We never try to stop. It's just as a hard freaking business.
Yeah.
And we had, in essence, 3 parts. We had beta product, right? Index product. We partnered with a bunch of people. That business has raised a decent amount of money. There are low fees in it though, right? But we've had a good partnership with the CI group, with Itaú in Brazil, with DWS and with State Street and Invesco here. So 5 partners raising assets, relatively low margin. We've got a great venture franchise. We just closed a $160 million venture fund. Our returns in venture have been top decile. And so that business used to be mostly first my money, then our money. Now it's, I'd say 30% balance sheet, Galaxy's money and 70% customers' money. And so that's becoming a good business. But we really got lucky and smart with this treasury company stuff. When we saw it originally, I was like, I want to be the asset manager. Actually, Steve Kerr said that. And I was like, good idea. I'm going to make it my idea. And we've doggedly pursued, I think we have 8 different mandates to be the asset manager, some 3-year duration, some 10-year duration, roughly 1% between some a little higher, some a little lower. That's a high margin business because you use the same infrastructure you already had. Yeah, you're adding a few people here and there. And so really excited that that business got its mojo in the last 4 months. First with the venture raise and then, and again, you just feel better about businesses the moment they're making you money. Even though you're growing for the long term, man, it feels good when they're
Yeah. Because we've all been through the cycles and it's horrific when suddenly your revenues disappear. It's just nice to have that.
In spite of the fact that it will implement a comprehensive ban on cryptocurrencies in 2021, China has quietly made a comeback as the 3rd largest Bitcoin mining hub in the world. The distant and energy-rich region of Xinjiang has seen a resurgence of miners who are taking advantage of the low cost of electricity and the fact that their operations are discrete. According to the most recent data, China is currently responsible for more than 14% of the worldwide hash rate of Bitcoin, which is evidence that the country's underground mining sector is still robust. At a time when Bitcoin is trading at close to $111,700 and the global hash rate is at an all-time high, China's miners are once again contributing to the growth of the most valuable digital asset in the world.
And what about on kind of providing risk capital to the market and stuff where you started with? That continues to be...
That's our bread and butter business. The best part of it is credit. We continue to have a great credit business. We're trying to grow it. I wanted to get
So
on trade.
credit in your terms is what? Lending to people?
Lending to people. It's in some ways margin lending. You know, we lend to miners, we lend to big whales against their Bitcoin. You know, we'll lend against their Bitcoin, we'll lend against their other coins. And so that business works out really well for us. So the credit business is good. Derivatives, you know, is a great business. Some years it's triply great, right? Because derivative business, you're making money on the spread, but you also have, you have, you know, you're always left with a bunch of risk. And so it's both a risk business and a customer business, the same as it was in Goldman or anywhere else.
And who are the users of the options? Is it still the hedge funds? And are you seeing a broadening out into the general macro funds and those guys as well?
Yeah, it's hedge funds. Though what's interesting, a bunch of the macro funds just feel more comfortable going on the CME or on the equity, you know, the ETF options now. But on all the non-Bitcoin and Ethereum coins. But there's still, you know, there's $4 trillion of crypto wealth. There are a lot of whales. And the one thing I learned, and it's a funny story, is crypto guys have such a bigger risk tolerance. When we were doing the Solana trade for FTX, I remember talking to one of my big macro friends who, you know, it's got a net worth probably in 10 digits, not 9. I'm sorry, 11 digits, you know, like not 10, you know? And he's like, what do you think I should do? 20, 30, 40? And then a crypto guy called up who was a proper billionaire. And he was like, I'll take 150. I'm like, okay, you'll put 15% of your net worth. The other guy was 1% of his net worth, like 0.1, right? And there is just something about it came easy to people. Right. I mean, by definition, it was all made in the last 12 years, really last 7 years. So it came easy to people. Therefore, they're willing to gamble it. And so I would rather cover 3 crypto people with $300 versus 15 TradeFi people with $3,000.
Well, because it's like the old days of global macro, right? When everybody was an actual risk taker.
There's a lot of risk that gets taken in our crypto community. And we stand in between and we help facilitate that. And so.
And is it still the Asians who are the sellers of premium?
Yeah, pretty much.
Yes. So the hedge funds and fast money tend to be the buyers and Asians tend to be the sellers for yield.
Yeah. Which is funny because my first job at Goldman Sachs that I really made good money in, I was the JGB yen derivative guy, all Japanese desk. I was the only white guy. And I was like, wow, I can source volatility from Japanese insurance companies. At that point, they were thinking of it in premium terms, not even vol terms. How much do I get paid, Novoson?
Yeah.
I told them, that's very good. And I would sell it to hedge funds who thought in vol terms. And the spread, you could drive a car through. And I didn't know what usury was at that point, but like it was a great business for Goldman Sachs. And I felt like, you know, it was my like little contribution to Goldman's P&L. But it was the same concept.
Yeah, exactly right. So what are you most excited about for the rest of the year?
Listen, we're in the build mode here. And you know, you launched that Galaxy One. I said the same thing after we did our IPO. I said, guys, I hope the champagne is stale, because the race didn't end, it just started, right? It feels like when you launch,
never finishes. This game never finishes.
And so we really got to put our heads down and build. We're looking for talent. We're hiring people. We're very excited. Listen, I think the end of the year is going to be wild. I think there could be a melt up in risk. Like you never know when things end, but I am very worried that this AI cycle is starting to feel very bubbly. That it just feels vendor financy. But again, Jan 1 of 2000 to March 20th, the NASDAQ just put another 44% on it. And I thought Jan 1 was going to be the end. It was the end for a day. Hup, down 5%, up 44. Like the end of bull markets, the end of cycles.
Well, I'll never forget your trade in ETH in 2017. it was that last quarter was wild. I remember I sold out my Bitcoin at like 2,000. I bought it at 200.
Yep.
I sold it at 2,000. Thought I was doing well. I sold out in April. By December, it was 20,000. 10x.
We went 10 to 20 in about 6 weeks.
Yeah. And you had the ETH trade on then, I remember.
I did.
ETH bailed.
I should ask, I don't have an ETH tattoo. I'm getting no more tattoos of cryptos.
No, don't.
But man, I should have got an ETH tattoo because it bailed my psychology out so much. I had left Fortress and I made so much on ETH that year. And that's when I sold some and bought my plane and I started my philanthropy. And, I should have at least sketched ETH into my plane, but it was that. And let me tell you, that ETH I sold at 330 to buy my plane, right? We're at whatever, 3,600 right now. Right? Expensive plane. But when you bought it at 1 and you sold it at 330, it felt, but that really restuffed my coffers and my psychology and listen, there was a lot of luck involved in that. The one thing that's interesting is the hardest part about creating great wealth is riding a trend. And all the great fortunes are in trend. There's not one great fortune that's not in trend. All those great CEOs who are so wealthy, they rode the trend. But when you're liquid and it's not your business, you want to just hit the cash register all the time. And so it was a little easier because I was already wealthy. And it was easier because ETH moves so fast.
Yeah.
It moves so fast that it wasn't like I didn't sell any. I sold a little, I sold little. And it just kept gapping up the whole, I think what was the high there was 1,100 that year. To think about it, I sold 330 and felt like a genius, and then I went to 1,100. But I kept selling the whole way up.
Yeah, the back end of a crypto bull market is wild.
Yeah, and it doesn't feel like we've had that.
No.
And so that's why we all hold out hope for that one last.
The famous banana zone.
With the intention of allowing institutional customers to utilize Bitcoin and Ethereum as collateral for loans. By the end of the year 2025, JP Morgan is taking a bold step into the realm of digital assets or cryptocurrencies. This development represents a significant departure from the cautionary stance taken by the bank in the past, and it indicates that digital assets are moving from the periphery of finance into its center. Major financial companies such as JP Morgan, Morgan Stanley, and Fidelity are incorporating cryptocurrency directly into their business models as the price of Bitcoin continues to fluctuate so close to record highs and regulatory clarity continues to improve. Increasingly, the distinction between traditional finance and digital banking is becoming increasingly blurry.